Let's take a quick little intraday look at the SPY. So today, even though the markets are pretty much flat, slightly green on the day session, it's been choppy price action. Pretty much this is a consolidation rest day. Are we going to go a little bit lower? Are we going to go a little bit higher? Is still yet to be determined. But one thing for a lot of you guys who do like to trade the S&P 500, I want to show you guys a little bit of supply and demand zones that you guys can kind of play off of. What we are looking at here, top zone being that pre-market high, as well as these highs that we tested around 8:50 a.m. Pacific Standard Time. So we've still not broken over the pre-market highs. There is no real breakout on the SPY until we get over that $428.50 range. I think once we do that, you have a little bit more comfortability holding this for more continuation. If you have traded today, you might have chopped yourself up around a lot of stocks that look like they're ready to go higher, suddenly pull back in, and just suddenly when stocks look like they're about to go lower, they bounce, right? That can be very, very frustrating, especially for a newer trader or an undersized trader, meaning you don't have a large account size to go out there and take every single good setup that you see. Maybe you're limited to taking one or two trades in a day, and your 1-2 trades doesn't necessarily work out, and now you're just sitting there kind of frustrated, right? You need to understand that on days like today, if based on your strategy and the way that you trade and your set of trading rules, if you don't have a good opportunity where you're going to be able to make money, it's okay to sit on your hands. Because I will tell you, the more days that you kind of chop yourself up and lose money, it's going to be more days where you're not going to be able to trade, or you're going to have to deposit more money or transfer more money into your brokerage account to kind of get back on your feet. That's not what you want to have happen. I would rather someone take a trade, win a trade, lose a trade, be down a little bit on the day, even a little bit on the day, but live to trade a better price action day versus then trying to chase everything and make that money back in one day. Again, guys, one trade can definitely make your P&L for the whole week. Now, if you kind of look at what's been going on with the SPY, we do have a demand zone where buyers are comfortable stepping in intraday today on the 18th between that 425 and right around that 426 area. You can see that we kind of came down off the open, tagged this area, nice big wick candle here. And once we pushed off this demand zone, we pushed all the way up to the top of supply. So one way that you can play supply and demand zones, assuming that you have these levels marked out and you understand how to chart the supply and demand zones, you want to make sure that we come out of the demand zone and we start putting in higher highs on the candles. Now, technically, once the SPY broke out of this 426 area, it's a hold. Your stop loss is going to be below $425.60. Obviously, if you lose this demand zone, you don't want to be in the trade anyways, and you're going to hold this trade and try to sell for profits into the next supply zone. That's how you trade with inside, an inside bar day, right? So once we got to the top of the range, we did sell off. And if you kind of notice where we came back down to our original demand zone. And once we got in this zone, we did start to bounce again. So as of where we stand right now at around 11 a.m. Pacific Standard Time, we're exactly in the middle of this range, 426 and a half, 427. We do have the top of our zone being around 428.40. Now, here's what you would be looking for if you're more of a swing trader, or you're someone who likes to put on trades for a little bit longer extended periods of time, maybe into the next day or the following few days. As long as the SPY holds the 425 area, this is considered a sit and hold, meaning that if you're in any of this price action, you kind of just have to bear through the ups and downs. But as long as we're holding this demand zone, we have to hold with the assumption that we are going to ride higher either to this next supply zone or break this. Now, if you're looking to just be a sole breakout trader, then you're not looking for any trades until we get over $428.50. As soon as we can do that, you can then play the breakout. And what you're going to want to do is use this supply zone to act as a new demand zone here. And once we break this, put in a high. Once we back test this zone, we need to hold it. And if we hold this zone, you hold your long trade. And if we lose this, you exit your trade for a break-even stop. I hope that kind of makes sense. Again, if you guys are looking to play the breakout on the SPY, it's over 428.40. If you guys are looking to play the breakdown and flush, it's below 425.60. If you guys are looking to kind of swing trade this into tomorrow, as long as we're over 425, this is a sit and hold. And if you guys are looking to short, we have to lose the 425.50. I hope that kind of makes sense. If you guys are interested in learning how to trade options, make sure to join my Discord and become a lifetime member at evolutiontraders.com. And I'll I'll see you guys all in the next video.